just officiating. My name is Emmanuel. I'm Chief Director in GTAC for Institutional Development Support and Technical Consulting Services. And the reason why I was asked to chair is that this project was done under my supervision and management. So welcome everyone, and thank you for attending. This webinar is about a project that we did a while ago. It was a public entities review and rationalization done for the Northwest Provincial Treasury. I just want to introduce Dhiresh. Maybe Dhiresh, you can put your camera on. Dhiresh Ramklass, known to many of you, I suppose. He has worked in management consulting basically for over 24 years in government mostly. You can read on the screen about his qualifications. What matters to me is that she's one of our most experienced long-term advisors. He's got extensive consulting experience in turnarounds and organizational transformation. He recently has supported the UIF TERS implementation during COVID. And then just before that, he led our project with the Department of Communication on the SABC turnaround. He's also performed the impact assessment for the corporatization of the TNPA. And he has advised along those years on a number of restructuring projects of state-owned enterprises and public entities. So this is Dhiresh Ramklass. He will present this webinar. This was kickstarted by our Treasury colleagues from Assets Liabilities Management at the time, who asked us to help with the rationalization of some of those Northwest Treasury entities. We should have in the room Lucky Sedumo, who was our client in Northwest Provincial Treasury. And we might have in the room some of our current clients who are also in need of entities reviews. We might have Lindelani Sigubudu from KZN Economic Development, Tourism and Environmental Affairs. And we might have Carmel Joseph and Ismail Akalwaya from the Office of the Premier in Gauteng. Welcome to them if they are in the room. This is also to say to you that this is basically something that we do on a regular basis and for which GTAC has actually built. We always work together with our Treasury colleagues. And now I just want to give the floor to Dhiresh. Thank you very much.
Okay, thanks, Emmanuel. Just want to make sure that everyone can see the presentation that I've put up. Is that visible?
Dhiresh, can you
We
go
can.
to slideshow view? There at the bottom, yeah,
right.
there, thanks.
Got it. Okay, good. Okay, is that better, Elaine?
Great, thanks.
Okay, good. All right, so thanks everyone for attending. I'm going to talk about our work that we did on the Northwest Public Entity Review. But before I start, I just want to acknowledge our clients who are in the room, and especially our clients from the Northwest Province. And the person we worked with closely is Lucky Sedumo and the HOD of the Provincial Treasury. And just to say that we had actually asked them for permission before we decided to do this presentation, and they have agreed that we can use the information that we gleaned out of that presentation. Now, there's quite a lot of information that has to be covered, and so I'm going to do it quite quickly, and I'm hoping that we can just do questions at the end. And there's quite a lot of information, so some slides I'm just going to pick up on the most important bits. But just to say that also in the room is some of our team. The team that worked on this was Anthony Albeker, Jeets Hargoven, Jerome Chaskelson, Inza de Jong, and Corey Smith, and I was the project manager of this assignment. And perhaps later on, after the presentation, we can have questions to the clients and possibly get some responses from the team who've worked on this assignment as well. Okay, thank you. So we're going to move. I'm going to discuss the project scope and the methodology. I'm going to give you some characteristics of public entities. I'm going to tell you what we found. I'm going to tell you what we recommended, and then I'm going to do some make some points about what I've reflected on as the experience that I've had on this particular assignment and on several others that I've been involved in. So this request was sent to us by the HOD of the Finance Department in the Northwest Corporation. And in fact, the initial request covered a lot more entities, but we finally agreed that we would look specifically at the Northwest Development Corporation, NWDC, the Northwest Housing Corporation, NWHC, and Northwest Youth Entrepreneurship Services Fund, which we're going to refer to as NWYEF. So the request was to review the mandates, the functions, the key activities, the institutional form, and the possible causes of financial distress, and look at the viability of their business models, look at cost drivers and revenue streams, and make recommendations that would provide for financial stability, enable long-term business continuity, but also consider whether there should be mergers, whether there should be rationalizations, whether we should be getting on board strategic partners, whether we should be disposing of or disestablishing these entities. So it was quite a wide brief. The methodology was really getting prepared, getting all the documents together, then doing the analysis of the data that we got, and then doing interviews, and then actually writing up the report. Now, before we go into the actual meat of things, I just thought I'd like to tell you about the differences between public entities and government business enterprises. In the national departments, you have a 3A or a 3B, and in the provincial space, you have a 3C public entity or a 3D government business enterprise. And there are a couple of key distinctions. In a 3C, which is a provincial entity, you have an enabling legislation. Your core alignment is to the public service. You must comply to the prescriptions of the PFMA. You must have a public purpose or mandate. You are tax exempt. You receive transfers, but you can generate income from other sources like the gambling board does, or the liquor board, etc. So you have a combination of different types of entities that fall into those spaces, like economic regulatory agencies and research agencies, etc. In a government business enterprise, you have a slightly different paradigm. These are more in line with kind of companies in the business environment. You have a MOI, you have, that must be in line with the Companies Act, must be registered at the CIPC. You have a shareholders compact. You can have enabling legislation, and most of them done, but strictly speaking, you don't actually need it. You're aligned to the King Code. You must comply with most of the prescriptions of the PFMA, but you do have some exemptions, like the Treasury Regulation 16A. But the purpose is to make money. You must be income generation, and it must be a commercial enterprise, and mostly you are required to pay tax, except if you have some kind of exemption for a public purpose program. And the idea from a funding perspective is that you must be able to make more than 50% of your money by yourself, but you can still access transfers from the fiscus. So this is quite important to remember the distinction between a 3C and a 3D in a provincial context. Now, there's a lot of requirements and reporting requirements that these entities have to adhere to. And so both in the Treasury regs and in the ordinary sections of the PFMA, you have prescriptions that tell you need to produce annual financial statements, annual reports, you need to do budgets, you need to do corporate plans, you need to write up shareholder compacts, and these apply in a differential way to 3Cs and 3Ds, and they tell you when it's required, when you've got to produce these things, and these are the different sections that govern those, that determine those dates and compliance factors. So now on to the assignment. Okay, so Northwest in 2018 was quite a difficult place to work in. It was a difficult political context, which was a difficult economic environment. There was lots of allegations of corruption. The economy was struggling. Treasury was saying to people, you need to take a haircut, and so budgets were being revised. And all in all, quite a difficult environment to work in. We took on the assignment towards the end of 2018, and we started by looking at NWDC. And in fact, we had split the team. Some of the team looked at NWDC and some of the team looked at NWHC and yes. And just to say that the Northwest Development Corporation has its roots in the Bophuthatswana National Development Corporation. So it's been around in some form for quite a while. And it's also gone through difficult phases in its life. So it was, due to high debt levels, it was placed under judicial management, and it remained under judicial management until 2005. And then in 2013, we had a merger where they merged NWDC with the Mafeking Industrial Development Zone and Invest Northwest. And then it also took on other entities. So there was a transfer of assets and functions of GLR SOC, which used to be called Dirapeng Golden Leopard SOC, which was transferred from the Northwest Parks and Tourism Board into NWDC, which in itself was quite problematic, and we'll go into that a little bit later. And further complicating this issue was that until 2016-17, the responsible member MEC for NWDC was the Finance, Economic and Enterprise Development portfolio. But in the course of that financial year, a decision was taken to transfer the entity to the executive authority of the Office of the Premier. Okay, so it's had to report to the Premier's office. And another complication was that the entire province was also subject to a Section 100, and that also impacted the project. And of course, there were directives that were issued because the actual department itself was also under Section 100. And so the Minister of Finance issued several directives, and some of the directives directly impacted this project. So there was a directive around the establishment of projects and program management units. There was a directive around the relocation of NWDC from the OTP to feed. So the Minister of Finance says you can't keep it there. You've got to actually move it back to feed. Then he suspended the rationalization of public entities, and there was an initiative to put all the entities into a single entity called the People's Economic Growth Agency. The Minister of Finance said, no, you've got to undo that. So, yeah, it was an interesting environment. And so looking at the mandate of the NWDC, the vision is to promote trade, attract investment, and ensure economic growth and transformation. And its mission was to look at industrial development, commercial investment, property development, the development of sustainable enterprises, trade and investment, and project management. So here are some of the findings. And on the corporate governance side, there were multiple disclaimed audits, and that actually made looking at the financials quite difficult because we couldn't really trust the numbers. But some of the statements by the Auditor General are quite revealing. It says the leadership's philosophy and operating style is not fully contributing towards a clean administration. He said leadership failed to appoint skilled staff in key positions within the finance unit, and training and development initiatives failed to address the underlying deficiencies that caused matters to be reported repeatedly. The accounting authority did not adequately comply with laws and regulations and internal control. Supporting documentation submitted during the audit did not adequately support disclosures. And he also said the accounting authority failed to instill good governance principles within the entity. So quite harsh statements coming out of the AG. We found a number of PFMA and NWDC Act breaches. They were not in compliance with several PFMA sections, section 51, 52, 54. They were not in compliance with 63, 64, 65. And the net result of these governance and accountability shortcomings is that the entity received 3 consecutive audit disclaimers. And when we were there, we thought it was very unlikely that they would that situation would improve in 2018-19. We had a real concern about whether this organization was a going concern. The assets reportedly exceeded the liabilities, but current liabilities exceeded current assets, and we had a big question mark on the actual valuation of the assets. There were growing differences between the statement of financial performance and cash flow. It was hard to reconcile group and subsidiary accounts. There were inconsistent terminologies across time and between entities. It was unclear how some of the revenue and expenses were accounted for. There were significant changes in accounting policy. There were errors that got corrected ex post. And there was very much an over-reliance on transfers from both the Provincial Revenue Fund and from other departments. And if you remember what I said initially about a 3D, it's meant to have more than 50% of own funding. It's meant to be commercial. So there were also findings on ops. There was a range of technical and operational issues. The SME unit had a significantly impaired loan book, and it was very unlikely that they would recover any of the money that they lent. The trade and investment unit was underfunded. The special projects unit acted as an implementing agent for a number of organs of state, and there wasn't much transparency about the policy and what focus this unit should be pursuing. And generally, there was kind of an opaqueness about the reporting. And the fiscal transfer appeared to have breached Section 38(1)(j) of the PFMA. So there were lots of allegations of malfeasance against some of these selected projects. On the subsidiaries mostly comprise companies that were originally held by the Parks and Tourism Board, but were transferred into the Development Corporation. And that transfer was deemed irregular by the Accountant General, by the Auditor General. And the largest of the companies, DLR SOC, was disclaimed at the time of transfer. And yeah, it's not clear whether the accounting authority applied its mind to that acquisition. And the disclaimed position continued in the subsequent years, and we thought it would unlikely change either. And also had a very complicated structure, which I'll show you now. And essentially, this had led the AG to question whether the tourism and hospitality offering was actually a going concern. But as you can see, those in the blue are the host departments, 100% majority owned, and the yellows are joint shareholdings and the reds are management contracts. And it wasn't very clear whether these were actually beneficial to the entity. And that's a pretty long story, so I'm not going to go into that. But what we recommended is that what we actually need is a turnaround plan for this organization, and the plan had to address at a minimum the internal controls. We needed to get adherence to PFMA, and we said to them, you know, this has got to be very carefully monitored, and you need some very specific activities to reduce expenditure and to increase your revenue to become self-sustaining. The other point here is that we also recommended that the AG consider a special audit in terms of Section 5 of the Public Audit Act. We thought that might be in the public interest to do that. Okay, so that was NWDC. On NHWC, the legal predecessor was the BOP Housing Corporation. This was then transformed into NWHC, and it was listed as a Schedule 3C public entity. And it operated as a housing entity of the Northwest Provincial Government for a while, and then became the Department of Department of Local Government and Human Settlements. And an interesting fact is that because a lot of the stock belonged to the former Bapuditswana agency, the stock of rental units were distributed across 4 provinces. So it was distributed across the Northwest, distributed in Gauteng, Northern Cape, and the Free State. So this gave them a bit of a logistical problem. And additionally, when the housing development function was transferred to the municipalities, the Housing Corporation was unable to access funding for the development of RDP housing, which had a negative impact on its cash flow. And so, they requested money from the Treasury, but due to budgetary limitations, they couldn't get new revenues. But what the province did was they transferred all of the residential properties to the Housing Corporation for it to let or sell so that it could generate its own income. And but this was challenging because there was a confusion about the legal status of the titles in the areas affected because of the repeal of the Proclamation 293. That is where areas were owned in trust, and it meant that ownership of housing became uncertain, making it impossible to actually transfer legal title to occupants or potential buyers. And so this meant for them that only income could only be earned from renting properties, mainly in the Mafeking area. So what is their mandate? They were given a broad mandate and powers and functions. They must determine the needs of the province with regard to shelter and accommodation and housing, and they must execute schemes and programs for the provision of shelter, accommodation, and housing. How do they pursue their mandate? Well, they do property management, they do property development. They also bought the Marula Sun, interestingly, in 2017. What we found is that governance and accountability arrangements are generally poor, except for 2 financial years during which the Housing Corporation got a qualified audit rather than a disclaimer. So it was difficult to place any reliance on the property info. Its asset register was a moving target. It changed from year to year. And as a result of the lack of revenue and lack of staff, performance was quite poor, and it wasn't achieving its performance targets. Despite its extensive property portfolio, rent collection was very low. They collected 2 million in 2017, 2018, and that was up from 120,000 in 2016, 2017. So they were not making money out of these, out of the property. The property portfolio is complex. It requires a tedious process to restore the title deeds. Many different consultants and conveyancers have been appointed to help the Housing Corporation with this. This has also resulted in litigation, and one of the claims is for 600 million rands. So we thought it might be better if they just appointed a single provider. In some cases, properties seem to have disappeared as a result of irregular and fraudulent sales of the properties. In terms of whether the Housing Corporation is a going concern, we've got disclaimed financial statements. Assets appear to be greater than liabilities, but the valuation is very, very doubtful. And it's got a very weak collection function. So we made some recommendations. It's similar recommendations to NWDC. We said internal controls, adhere to PFMA, go get the money that's owed to you, and increase the occupancy of the vacant properties, and hire to credit-worthy tenants, and monitor this plan, and also consider initiating a forensic investigation, and also AG should look at whether they need to do a special audit of this. Okay, so that was the second organization. In terms of the Youth Entrepreneurship Services Fund, this was established through an act in 2016. They disestablished NWYEF because they thought it was didn't have the powers and functions that they needed. They motivated the new entity in terms of the high unemployment numbers, and they said it would be a one-stop shop for youth, and it would focus on job creation and skills and enterprise development. And the business case referred to the National Youth Policy. Okay, so this is the point that I want to make, that it had a lot of functions. So when you look at the list of functions, you'll see there's A to H here. They wanted to support youth entrepreneurship promotion and create initiatives. And then it goes from that to I to O, and there's lots more to do there. And then they wanted to create a fund, and you finally end up in V. So you've got lots of objectives here. We're not sure what was prioritized. They had a very small budget. We were not sure what they intended to do with the collateral fund. So overall, we thought that the mandate was very problematic, and it was unclear to us why a new public entity was needed, given that there are other government departments and existing organizations with similar functions that perform that role. And so we thought that the province should rescind this act and that they should delist yes. And our client agreed with that understanding. So in terms of recommendations, the recommendation around 38(1)J, I think, is key. And it says, before transferring any funds to an entity, the accounting officer must obtain a written assurance from the entity that that entity implements effective, efficient, and transparent financial management and internal controls. Or if such written assurance is not or cannot be given, render the transfer of funds subject to conditions and remedial measures requiring the entity to establish and implement effective, efficient, and transparent financial management and internal control systems. What we said to the client is that this section gives you the power to actually make the transfers conditional, so that all of the outstanding activities, all of the things that need fixing, you can use this section to actually get that done. And you can make the transfers conditional. And if that's not done, then you can stop the transfers because you yourself as an accounting officer would be in breach of 38(1). So we use that. We also said none of the entities should be merged or closed until you fix the problems in those organizations. And of course, we just spoke about rescinding the act. Okay, so what are my reflections about all of that? Well, we've done several of these now, and we've done work. We're currently doing work in KZN. We've done work in the Eastern Cape. We've done this Northwest Public Entity Review. We've done the PDFI review. And so what we have found in there is that we've encountered duplication of legal mandates. We've seen unsustainable business models. We've seen bloated headcounts. We've seen poorly performing boards, fraud and corruption, and ultimately very poor development outcomes. And we have made recommendations about mergers and closures. We've made recommendations about very tough decisions that had to be made to improve organizational performance. And ultimately, these recommendations need political and technical support if they are to be implemented. And so you actually need these decision points where you take the information that you have and you get the politicians and the technocrats to agree on the fixes that need to be made. In terms of, for what we're doing at the moment and for clients who are considering reviewing the entities, because there are lots of these entities in each of the provinces. There are 3 Cs, there are 3 Ds, and there are also NPOs, and there are trusts and all sorts of things that exist in all the provinces' portfolio of entities. And so, we've got to reflect on, is there strategic alignment? So do the activities and the objectives of the entities align to provincial and national objectives? Are they actually producing the outcomes that we want? If not, what do we do? Do we realign them? Do we merge them? Do we unbundle them? Do we close them? Then there's political interference. So how do we get political insulation? How do we guard against political interference? How do we get better transparency? Right? Because sunlight, as we know, is the best disinfectant. So how do we make sure that nothing is in the dark, right? And then everything boils down to human behavior. So what about the ethics? How do we change the value systems and the ethics in these organizations so that people don't only consider what is good for themselves, but they have to consider what is good for everyone, right? So those are some of the considerations that we have to make. And I guess my final cartoon is about, and this for people who can't read, it says, I think we're in good enough shape to start making the same mistakes again. So we continually on this, as a former colleague had said, we are continually on the turnaround about. We go through these cycles of stability, and then we go through these cycles of very deep dysfunction. So how do we stop that so that we get long-term business continuity and stability? Okay, so I'm going to stop there. Thank you very much, and I will open the floor for questions. Emmanuel, Elaine, back to you.
Thank you very much, Dhiresh. This is a very, very dense presentation of a very, very complex project. And I hope that people would be able to grasp, the essence of it. And I just want to say that we can also make, some documentation available. We can also on request, we can also debrief or brief people if they need to be briefed. So thank you very much for trying to make it as succinct as you did. And I'm opening the floor for questions. So I'm looking at, yeah. Are there any questions that come to mind? Yeah, I have somebody, but I can't see who that is. There's a hand there. There's Khalib Tombe. Please, Khalib, come in.
No, thank you, Chair. No, thank you for the presentation. It was actually very informative. But I think maybe it's more comments from my side than actual questions. But I'm assuming there was no, if it was example with the first entity which was a 3D, there was no the dividends basically paid back to government with regard to any in terms of a function of a 3D that you pay dividends back to government. The other thing I wanted to say is it was quite concerning that the Auditor General picked up these problems, but yet I'm assuming the mother department or the responsible department still transferred funds the following year. So obviously the controls in terms of what the PFM is saying, the account officer department to make sure that there is controls in place. I would say a lot of the issues can also lay by the responsible department not actually taking the entity to task for what they actually did, basically. Thanks, Chair.
Thank you, Khalib. And when you come in, please, for other attendees, just say where you are from. Thank you very much, Khalib. Dhiresh?
No, sorry, I'm from the Eastern Cape Provincial Treasury.
Thank you. I thought so. Thank you very much, Khalib. Dhiresh?
Yeah, so on the issue of dividends, I mean, they didn't pay dividends, just like many of the 3D public entities that we have and SOCs, because a lot of these findings can actually also apply to the SOCs that we have, who should be paying dividends, but are not. And so, both were in quite severe financial distress, and so we're certainly not in a position to pay dividends. And I mean, the AG had been making these points repeatedly, and nothing had been done. But this is not the only province where we've seen this, and so there is this trend to not actually take action, and that is highly problematic.
Right. Whilst I'm waiting for hands to come up, Dhiresh, I would like to say you ended this presentation on quite a cynical note. So if it's a turnaround about and we keep saying the same mistakes, what is the purpose of all of this for us? So I just want to be my own devil's advocate and ask you, so what should we be doing about that? We as a collective government, Thank you. I don't see any other hands up right now. You can go ahead.
Yeah, I mean, this is really a question that, it's a very important question for government because there are so many, the dysfunctional entities. Yes, they are working entities and some of the entities work fine, but we really have to understand what are the drivers of this dysfunctionality. I mean, why are we not getting this right? And are we actually, do we actually understand what the issues are? And are we addressing the right issues? Because we tend to put a lot of red tape in the hope that we will solve the problem, but we actually don't solve the problem. So do we understand what the issue is, and are we attending to the right, problem? But I see there are other hands, and it would be really useful to get other people's opinions on this. And perhaps some of our project team could come in on that.
Yeah, I was going to invite the project team to come in as well whenever they want to, but we have our good colleague Julia de Bruin, whose hand is up. Julia?
Thanks, colleagues. Julia de Bruin from the National Treasury in Public Finance. Did you look at the role of the boards and whether that may be an issue? So you got the wrong people on the boards. They don't know elbows from anywhere else. They just there sitting to get their daily allowance. They don't understand their fiduciary responsibility. They've never been trained in what it is to be a board member. Is there something like that? That's the one end. And I'm asking this question, colleagues, the other colleagues on the call. In my portfolio, there are 67 public entities. Yes, 67. Now, I've only got 8 people. We can't possibly, even if we worked every day and the weekend, have proper oversight over the public entities because they're a step away. So we can't track their expenditure in the system that we have. We rely on them to tell us about the expenditure. Yeah, so they can tell us anything they like. So you get the inputs for our publications. They have an admin program. You think it's the same admin program like in a normal department, but actually they deliver services out of that admin program. So there's higgledy-piggledy in there. There's not. So I want to understand from the Northwest Treasury's perspective, is it an oversight problem as well, plus the things that I've raised? Thank you.
Thank you, Dhiresh. Yes, we have seen the role of the board in many, many instances. So would you address this question?
Yeah,
Thanks.
I think we certainly saw problems with the boards, and the boards, I think, don't understand their fiduciary duties, and I think it's because a lot of the board members are not trained. And there's the IODSA. You could be trained, quite well, but we don't put those kind of competencies and trainings as a baseline for being appointed as a board member. So professionalization of the boards is absolutely key, because sometimes they just become mouthpieces of a politician or a technocrat who tells him what to do. I mean, we've seen it now, even where there's so many challenges in the boards, and we've seen this recently in SAA, where the chairperson of the board is the CEO. I mean, how is that possible? We now have King 4. We have very clear guidance on why that's a bad thing to do, but yet we are still making those kind of mistakes. So there's a lot of professionalization that needs to be done, both with the boards and with the EXCO members, because the executive team need to be well trained. Otherwise, you're never going to get the kind of outcomes and profits that we actually would like to see from these entities. But perhaps there is someone from the Provincial Treasury in the Northwest who can also respond to some of the oversight challenges. I'm not sure whether there's anyone here who could respond.
So whilst we're waiting for that, Dhiresh, maybe some of the team members could add or elaborate on some of the points and even address questions. There's one of them, Jerome Jeskalson.
Well, actually, it's not. It's Inza. Jerome's not in the office with me, and for some other reason,
I wouldn't
seem
know
to be
because it
logged in
says
as
Jerome
as
on my
Jerome.
screen.
Just
Thank
to,
you.
Yeah, they're
I
confusing.
know. Exactly. I just wanted to speak to what Julia was saying. So, Julia, we looked at NWDC, and they had shown in the previous financial year that they'd gathered, I think it was 18 million rand in rental. I might be wrong, the figure's correct in the report, but it hadn't been banked. So we met with the CFO and said, like, look, you know, your numbers show 18 million rand revenue, but it hasn't been banked. And the guy looked at us and said, I don't know how to answer that question.
Yeah.
All right, I now have Jerome who just spoke and who was Inza, and then I have somebody else called Jerome and Inza who has their hand up.
That's the real Jerome.
Jerome, do you want to come in? Otherwise, put the hand down. All right, there's no answer from either. So, okay, this hand is up. Okay, the hand is down. Anybody else from the team who would like to add anything? We're getting to 10 to 3. So if we don't have any other hands, maybe just a last remarks, maybe Dhiresh?
Yeah, I do think that that there are provinces that are looking to do major review. We know that Gauteng is looking to do quite a big review of the entities that it has, and so it would be useful, I think, for the Treasury to start thinking about how it could actually help with some of these problems that we are seeing, on the ground, and to start thinking through what could be solutions that could, permanently change the behavior and the performance of these entities, and also, I guess, support some of the realignment and the rationalization that needs to be done, because what we've seen is that there's quite a bit of duplication of mandates. Some of the organizations don't really need to exist. They could be merged. They could be realigned. And so, I would say the ongoing support of that kind of review process from the Treasury should be backed, and also, we should be thinking about longer term solutions. So that's my final kind of say. But I think I would love to hear what our public finance, our ALM people, and our PEGU people have to say about that as well. Thanks.
Dhiresh, thanks for that. There's a comment on the chat from Lilam from the Western Cape Provincial Treasury saying they're in the process of starting this process. Yeah, thank you, Lilam. And then we will also make sure that we do share the presentation. Thank you. So on this note, if there are no more questions, I'd like to thank you for taking time on a Friday afternoon to come and listen to our story. Thank you very much, Dhiresh and team. Thank you very much, Elaine and team, for making this happen. And I wish you all a very good weekend. Thank you.